This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil inventories are beginning to fall in some regions as demand outpaces supply, constrained by deep production cuts from OPEC leader Saudi Arabia, providing support for prices which are expected to rise in coming months. JP Morgan analysts said this month that oil inventories, which include crude and fuel products, now play a bigger role in determining oil prices than the US dollar because Western sanctions on Russia have accelerated oil trading in other currencies. We expect stocks to draw relatively aggressively in July, and by the end of August, we should be through the stock builds that we saw in the first half of the year, said Christopher Haynes, an analyst at Energy Aspects.
Asia's demand for liquefied natural gas, LNG, ticked up to the most in 6 months in July, but the small increase was partially offset by declining demand in Europe. Asia's imports of the super-chilled fuel were estimated at 21.85 million metric tons in July by commodity analysts Kepler, up from June's 21.28 million and the most since January. Europe's imports were estimated at 8.72 million metric tons in July, down from June's 9.06 million and lowest monthly total since August last year.
Moving on to the top news in the energy sector.
The White House on Friday proposed reforms to the environmental review process for new energy projects that it said would help speed up permitting for electric transmission and other projects needed to curb emissions linked to climate change. The proposal would revise National Environmental Policy Act, NEPA, implementing regulations by encouraging more programmatic environmental reviews of multiple projects rather than individual reviews, and by allowing federal agencies to exclude more project categories from review. It would also limit the need for environmental reviews for projects that federal agencies deem to have significant and long-lasting positive impacts.
Oil prices edged lower on Monday, but were hovering near 3-month highs, set to post the biggest monthly gains in over a year on expectations that Saudi Arabia would extend voluntary output cuts into September and tighten global supply. Brent crude futures were down 45 cents to $84.54 a barrel by 0315 GMT, while US West Texas Intermediate crude was at $80.25 a barrel, down 33 cents. The September Brent contract will expire later on Monday. The more active October contract was at $84.23 a barrel, down 18 cents.
Next, we have the top news in metal markets.
Copper prices in London were on track on Monday for their best monthly performances since January as traders cheered the prospects of further stimulus in top consumer China and that the US Federal Reserve will pause rate hikes for the year. 3-month copper on the London Metal Exchange was up 0.2% at $8,679 per metric ton by 0301 GMT. On a monthly basis, the contract was up 4.4%. The most traded September copper contract on the Shanghai Futures Exchange increased nearly 1% to 69,450 yuan, $9,724.44 per metric ton. It is set for the second straight month of gain, up 3.6%.
Gold prices were bound for their biggest monthly gain in 4 on Monday as expectations grew that major global central banks may be nearing the end of current monetary policy tightening cycles. Spot gold was down 0.2% at $1,954.79 per ounce by 0431 GMT, while U.S. gold futures slipped 0.4% to $1,953.80 per ounce. Markets feel vindicated with their assessment that Fed rates are at or near their terminal rate, with key inflation reports from the U.S. all pointing towards a faster pace of disinflation, said Matt Simpson, a senior market analyst at Citi Index. We will now look at the top news in the agricultural sector. Russia will get buyers of its farm exports to pay in rubles rather than dollars as a way to circumvent Western sanctions, Deputy Prime Minister Viktoria Abramchenko said on Friday. She said the government was preparing a draft decree that would enable buyers to open special ruble accounts to make this possible. Moscow has long demanded that its state agricultural bank be reconnected to the international SWIFT bank payments network from which it was shut off after Russia invaded Ukraine last year. Its failure to get reinstated was one of the reasons why Russia last week quit the Black Sea deal for Ukrainian grain.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.